Let's talk some more Nvidia. Let's talk tech. Jenny Horne, host of Next Gen Investing, with us. What do we got, Jenny, for Nvidia this morning?
So we have a pretty optimistic price target out of Raymond James. I mean, $1,100 a share, so that implies 25% upside from where we closed yesterday. That's not too bad.
Bigger than the last note we talked about, right? Which was what, Morgan Stanley at 1,000?
Yeah, and I will say that now we're in this like 1,000 club where it's not that unusual to see 1,100. That used to be a street high. Now the street high is over $1,200 a share. So just depends on, I guess, how much of this AI market you think can grow and what percent they can capture. I mean, obviously they have been the dominant name, but yesterday they bucked our trend that is like the Nvidia is the read for the overall market. As the overall market was lower, Nvidia somehow higher. There wasn't really a clear catalyst why, but this analyst did say that the pause in spending is unwarranted and that they believe that concerns regarding this potential decrease in customer spending ahead of the Blackwell ramps are really unjust as inferencing demand continues to outpace GPU supply. They also said that after meeting with NVIDIA's head of investor relations, they expect the H200 to be a key near-term driver and the B100 and B200 ramps into the second half of this year. Their recent conversations in Asia also point to the GB200 NVL systems, which NVIDIA can capture additional share of in the data center CapEx space. So they continue to see upside from here. I mean, they did really highlight the praise that we got from the street overall after the GPU unveiling at the GTC conference last month. Aside from though enterprises really fighting for a piece of this overall AI model, they continue to see NVIDIA actually improving relationships in Asia, which I think is really key because that has been, I mean, they've now adjusted their chips several times to be able to meet these regulations, to be able to even do business in China.
Be like water and adapt, right?
AMD is the one that has to adapt now, right? They're the latest that is not adapting well enough.
Yeah, these companies really don't want to lose China as a customer, but we're making it really hard on them from a government standpoint, from a regulatory standpoint. So I agree, that's kind of an interesting tone that they strike there. All right, so I mean, price target's still coming in hot. Expectations for this thing are as high as they've ever been.
They are, but I will say that I feel like now, of course, as analysts are fairly reactionary, we've seen a few more analysts that aren't outright sell, but that are taking on a more neutral stance this week. That
really?
I mean, just like for the first time all year that we've seen analysts being like, well, wait a second, maybe some of this AI spend is slowing down. Which I think is a fair assumption, but you're also fairly late. And I think everyone's been so afraid to make that call because if you believe that the addressable market in all things AI is like a $200 billion opportunity for NVIDIA over the next 3 years, you wouldn't want obviously to be the lone analyst with like a underperform rating. So now I've started to see analysts that have a little bit more courage, which I respect because anything's capable of pulling back.
But their average price target's still pretty high, and the highest being 1,200. You said
over 12. I think it's like 1,230 something, and then I will say the average price target is well over 900 now.
Yeah. Okay. All right. So there still is kind of this baked-in expectation, but definitely encouraging in a down market yesterday that Nvidia kind of carried the big tech trade into the close. Thanks, Jenny. Thanks, Kevin.